What is up? In this short little video, I am going to be going over a couple tweets of mine. I think I have 5 here. Go 2 minutes per tweet, shouldn't be longer than 10 minutes. And I'll be putting the tweets somewhere. This is my room, or my house, I guess. Yeah, I built it. It's pretty dope. Anyways, first tweet, number 1, pick a model. 2, collect real data on it through backtesting. 3, trade it for 2 years. 4, reflect and continue. And then I go, congrats, you're now a profitable trader. Now, here's the thing. People will always try to find the faster way to do things, and there are faster ways to do things, and somebody commented on here, can do this in 6 months or maybe less. I speak from experience. That's not really what I meant. Like, what I meant was, like, take as much time as you need backtesting it, but legitimately trade the model for 2 years. Like, go through the whole process with the model, 2 years of it, of your life, going through them, getting to know your model, getting to know yourself, seeing how your expected value plays out, stuff like this. Then you reflect on that 2 years. So you can take a year to backtest, or whatever. If you're lazy, a year, fuck. It shouldn't take you more than a couple months to backtest everything. Now, once you're there, 2 years from that point, trading with money or through props or whatever, then you reflect on that and you move forward. I saw a few people saying you could shortcut this, and it's so crucial. Like, every single pro I've ever heard talk says you need that time. Now, most people are working jobs and they don't have enough time to really trade every day. Now, what you can do is you can record your screen during the session, and then once you're home, watch your session and act as if you were trading that session, but it's just pre-recorded, if that makes sense. But yeah, pick a model is very broad, obviously. Like, you need to learn what technicals are and everything, so this process can take a while. But legitimately trade for 2 years. And number 2, this didn't get as much recognition because I think the English was too, like, people on Twitter are dumb. Like, the English, I think, in this tweet was too hard. It says, pressure is prestige, pressure is a privilege, get it done. Pressure is prestige, which means through pressure, you get prestige or recognition. Make sense? Nobody has done anything meaningful in their life without pressure, and that is a fact. It is a part of life to go through hard times, your Rocky cutscene, or whatever the fuck you want to call it. It is part of life to do that. That is where you get prestige, in the pressure. Now, pressure is a privilege, meaning when you are under pressure, under a business or under your family, that is legitimately a privilege, only because that means you are doing something of purpose, and not everybody is doing something of purpose. Whether that's just providing for your family, tending to a farm, you got animals, you got whatever. You're trying to get out, you're trying to do this, you're trying to do this. You put pressure on yourself to do that. That is a privilege. You are privileged to hold that burden and to try and fight. That's legitimately what that means. Now, this didn't get that much recognition, but I thought it was a banger tweet. Something that I think about a lot. I'm like, I'm privileged to be this pressured in my life because it will be the one in my family to get these big things done in my life. Bigger than you can even imagine, not just being a profitable trader, like whatever. Anyways, next. If you're not losing, you're dead. Get over it. This shit is facts. Holy shit. I hate fucking seeing gurus saying, I know how to guarantee a win and know how to do this. And like, no, boss. If you're not losing your trades, you are not alive. Simple. It's not real. Nobody wins 100% of the time. Nobody. No individual trader. There are probably like the high-speed algorithms and all this stuff that just snap, buying, selling spreads, getting a little 2-3 cents per trade across billions of dollars, and you can make millions of dollars a month doing that. But it's all quant and computerized. Like, that's not something that me and you would be doing per se. I mean, I don't know what type of coding prowess you have, but my coding knowledge is very limited. But that being said, it's a part of the game, and you have to understand that. It's not so cut and dry as just, I need to win every single trade. Like, that's just not how it is. Your psychology needs to be at a place where you can take a loss and be okay with it. Your psychology needs to be at a place where you can take a win and be okay with it. You don't want these big highs and lows. You want to be like this pretty much your whole fucking trading career. Because once you're up high, it doesn't take much for you to come fucking crashing down. And we know that from market psychology. This one's a bit controversial. Maybe you're just scared to lose. That's why you haven't liked price action this month. Now, I saw a lot, when I tweeted that, I saw a lot of so-called profitable traders posting their monthly reviews or whatever, saying that they didn't like price action in February and March, when it was like the fucking best time of the year to trade, in my opinion. Before this tariff bullshit came out, April's kind of been fucked. End of March was kind of fucked too. But that being said, February and March were pretty good months to be trading. And it's just how... Okay, fair enough. If you have a very meticulous model and you want that prime setup, you may not take a trade in a month. You may not. Granted, I'll give you that. But for those people who have a model or know how to read price action and just say they didn't trade because they didn't like price action, it's like, that's a scapegoat for something. Like, I'm just not buying that. I'd need to really sit down with them and be like, what the fuck are you doing, first of all? Like, within quarterly theory, our space, you will see a fucking trade setup at least once a month. Like, that is pretty much guaranteed. Pretty much fucking guaranteed. Unless you're trading fucking yearly cycle, you're getting at least one monthly cycle a month. Like, fuck me. You can look at all these different assets too. Like, you're getting fucking trades. Like, what are we doing here? So when I see that, I'm just like, oh, this guy's just fucking scared to push buttons. Honestly, he's scared to put money at risk. He's got some psychological issues. Maybe he's working through that. Maybe he's not. But I just think that's a whole load of bullshit, man. Like, haven't liked price action. Fair enough, you don't like price action one day, but a whole fucking month? Like, no. There's something going on there. Don't be fooled by that. I don't think anybody who really says that is a profitable trader at all. Anyways, next. Okay, this one's a little bit of sauce. The asset that Turtle Soups is by far the better asset to trade. Always something in that low to enter off of. Now, the candle that closes below the low is the candle to pay attention to. That is a lot of sauce. That is what Romeo says. It's not so much a quarterly theory concept, it's more CRT. It's something to be studied. Now, that being said, when you don't have a body below a low and you just get that turtle soup, you can still find an inversion fair value gap. You can still find a fair value gap. You could probably still find the fucking order block that you could enter in on. There's everything is in there. Now, why not the failure swing? Well, you could easily rebuttal me and say, well, there's probably a fair value gap or inversion fair value gap in the failure swing, and you'd be absolutely right. The reason I trade turtle soups is because it is a clear display of liquidity being taken right in front of my eyes, where I know, okay, that low is good. We're not touching that low. When we come off of that low and we retest it with an order block or fair value gap, it's an immense confluence for any buyer, really. Because this is what you have to understand about algos. Algos won't run without buyers and sellers. There are 100% algos. But who the fuck is providing liquidity? Exactly. It's the people. So you need liquidity to be able to have an algo. So it's not just algos. Yes, it's not just fucking algos. That's my point. So when I see a low being swept, retest that low, there are more buyers in a turtle soup than in a failure swing. Which is why I like those moves better. I like to see those moves be more exaggerated. Now people say that failure swings go further, which you could argue. I'd need to see data on that. I'm not a big believer in that. I like to see a low being swept because it's a clear visualization of what market sentiment could be doing. And yeah, anyways, turtle soups are by far better. Watch for that body close. But that's pretty much the 5 tweets I wanted to cover. There's some sauce in there at the end. Talk some shit, nothing crazy. Yeah, it's a beautiful Monday here. It's, I think, like 20, 15 degrees Celsius. Just might go for a walk. See y'all around. Oh, shit.